Welcome to today's deep dive. On August 5, 2026, the fundamental physics of the market seem to just, well, break.
Yeah, the traditional rules just completely evaporated overnight. And, when human logic fails, we turn to the machines.
Right. So our mission today is analyzing these leaked observation logs from Team AI Lab. We're looking at two totally different AI trading philosophies trying to survive this, total financial hurricane.
Exactly. But before we get into the wreckage, we need a quick ground rule for you listening. This is purely a scientific observation of algorithmic behavior under extreme stress.
Right. So no predicting the future, no investment advice. We're just looking at simulation data in a very specific, very hostile environment.
That boundary is critical. I mean, the data from this storm gives us a front row seat to a clash of survival strategies. So on one side, you have the wave riders.
Okay, they rely on what's it called, surging force tracking?
Right. Essentially, they're momentum algorithms trying to harness the violent energy of the market.
But in a storm like this, surfing doesn't really seem to work.
Right.
I mean, the logs show the active main force of wave riders getting absolutely crushed.
Oh, totally. Out of 22 active algorithms trying to ride the momentum, only 10 are actually managing to hold positive points.
And just to clarify for the listener, this point system is based on ROI. So holding positive points means they're pulling off profitable trades while everything else is bleeding.
Yeah, and the reason the wave riders are failing isn't because of bad code, it's the environment itself.
Because they're programmed to buy when prices surge, right?
Yeah.
Expecting the trend to continue.
Exactly, but in a highly volatile chop like we're seeing, a price spikes up and then instantly reverses.
Wow, so they're basically buying at the exact peak of a rogue wave and getting wiped out by the immediate crash.
That's a great way to put it. Which brings us to the second philosophy, the mountain climbers. Their strategy is called equilibrium detection.
And their numbers are wild.
Yeah.
Out of a much smaller main force of 12 active climbers, 9 of them are in the green. I'm just trying to wrap my head around this.
It's totally counterintuitive, right?
Yeah, because if their goal is to find a still place in equilibrium, how does that survive a market plunge? Doesn't standing still just mean holding the bag as your assets plummet?
Well, that's the intuitive trap. They aren't standing still by just buying and holding a falling asset. They are standing still in their analysis.
Oh, I see.
Think of the mountain climbers like a pair of high-end noise-canceling headphones.
Okay, so while the wave riders are trying to react to every single deafening sound wave,
The climbers are mathematically programmed to filter out the static. They completely ignore the violent, temporary price swings.
so they just mathematically hunt for a true baseline, like
Wow.
a momentary balance in the chaos.
Precisely. By finding that tiny pocket of stillness, they avoid acting on false signals.
Right. And to see if that resilience was real or just a fluke, the lab actually threw fresh recruits into the exact same storm today.
Yeah, at 9:20 a.m. Japan Standard Time, they drafted what they call new talent. So that's 2 new mountain climbers and 3 new wave riders.
Just dropped straight into a 10-session crucible. Talk about a brutal stress test.
It really is. And the season standings reflect the sheer violence of that test. The climbers posted a daily score of positive 20.9 points.
Wow, which actually pushed their season total to positive 3.5. Meanwhile, the riders just hit a wall, right?
Yeah, a daily score of negative 33.7 points. That drags their season total down to a massive negative 37.1.
Ouch. And looking at the 10-session exit logs, the riders lost 5.1 points just in metal products. But the climbers, they only dropped 1.5 points across steel, machinery, and electronics combined.
What you really have to pay attention to, though, is how both of these teams are heavily deviating from the major indices.
Right, like the Nikkei 225 and TOPIX. Looking at this massive gap with the Nikkei, it really feels like we aren't just seeing a dip. The rules of the market have just vanished.
Exactly. It's an unprecedented anomaly. Traditional logic just completely breaks down here.
Which makes those 9 surviving mountain climbers so fascinating. Here's where it gets really interesting. Are they acting like, lighthouses in the dark?
That's a perfect analogy. If we connect this to the bigger picture, they aren't just surviving. Their ability to find equilibrium is illuminating a new way to process a market that has essentially lost its mind.
Right. Which totally changes how we should look at these harsh numbers. I mean, this bloodbath isn't a defeat for the algorithms.
No, not at all. It's cold, forward-looking research. Every time a wave rider gets wiped out, Team AI Lab logs that failure.
So it becomes vital observation data to engineer the next victory. They're basically mapping out the exact boundaries of where their logic shatters.
Exactly. That is the pure definition of adaptation.
Which leaves you with this provocative thought to chew on. If an AI learns best when its logic fails during a storm, is extreme market chaos actually the ultimate teacher for algorithmic resilience?
Wow, yeah. Is a broken system the only way to build an unbreakable machine? That is a profound question to leave on.
Definitely. So if you want to keep tracking how these algorithms evolve and dive deeper into this scientific observation, be sure to subscribe to the channel.
And you'll also want to click the Substack link in the video description.
Right. Sign up for a Substack subscription there to access all the detailed analytical data for yourself. Thanks for joining this deep dive, and until next time, keep questioning the data.